Okay, guys, what I want to talk about here is the strength of the bounces. Okay, now you can see right here, this bounced perfectly up into between the 61% and the 78%, and that was your short. Okay, now if I delete that and go to the next one, you can see what's happening here. Okay, price is now into the 50% retrace, right? We are right into the 50%. Pierce of it, sorry, we're into the golden pocket on our way to the 61%. Now, if I go back here, I want to talk about the strength of the bounces here, right? So when we started off, okay, price topped out, we dropped to here. This was our low. Where did price bounce to? Price bounced and touched the red 78% fib retrace. So the bounce was pretty strong. We came right back up there and touched the red retrace. As the bounce, as the moves went lower, price started losing strength on the bounces. You can see this time, this drop, price bounced, it did not hit the 78%. This is a sign of weakening bounces, okay? Now let's go to the next drop. The next one is right here to this low, and what happened? Price got weaker again on the bounce, and price moved up and perfectly touched the 50% retrace. Okay, so with that information, we have already done this. The first one bounced into the pierce of the 61%. We are now into our second bounce. This second bounce should be lower if we are going to be bearish. So price, in theory, should not pass the middle point of the 61% retrace. Let me just clean this up a little bit. You can see right here, the first bounce came right to this white line in this bounce. This bounce here should be lower than this if we are going to be bearish. So implying that the potential of a short in this area right here is fairly low risk because price should not get above this line. That would imply there's a higher bounce than the previous one. So it's implying that there may be a short opportunity in here, right, with a stop above this white line. I'm just saying we have to be open to this as well because there is a $1 billion burn, and I don't trust the market when I see that. Even though getting above these daily moving averages and the 3-day moving averages is very, very good, don't get me wrong. But if we do get some sort of rejection in here, we have to be open to a short.